Good morning, NORDEEP Summit. Wonderful to be back here in Tripoli. And as we all know, the current world definitely needs more deep tech solutions to solve the challenges that we're currently facing. And I'm joined today by a really exciting panel of experts. So let's have a look at the investor perspective for 2025, especially regarding deep tech. So I'm joined today by Patrick Loco from University of Jyväskylä, Marcin Heikka, co-founder and GP at OTB Ventures, and Julian Fredoni, Head of Strategic Partnerships and Corporate Venturing at Honda Innovations. Warm welcome, everybody. Patrick, let's start with you. What would you say, like in today's landscape, what differentiates a VC investor who can actually win your trust in deep tech today?
I'd say when we talk about today and yesterday, the fundamentals haven't changed. The biggest thing in the market that has changed, there's much money on the market, so there's less money on the table, and LPs are more careful, like us, especially the ones who did, how would I say, lose commitments in late 2010s, early 2020s. So LPs are doing their due diligence much more thoroughly. So getting money is harder. The cut has risen. But then if I look at the Finnish VC LP market, a couple of things that I would say is like the VCs who are trying to raise, they need to have all the basic things in place. Like they need to be good investors. They need to be able to show that they can do and manage deep tech investments. But they need to be able to convince Finnish LPs about their capacity to close the fund, which is currently a big thing. And the way they would do that is by making sure they have a very good anchor investor. Like we're one of the biggest LPs in VC, but we piggyback off other people's due diligence. So as a VC, when we're fundraising, we look for two things. Can this fund here? And then have an anchor investor whose DD we can piggyback off. And if you don't have those, then we most probably won't look at you now, and we'll wait for those things to be there.
Makes total sense. What about Marcin, like from an investor perspective, how do you impress your LPs with your deep tech thesis?
So I would say deep tech gives managers kind of like advantage in many ways. So I would say that deep tech investors have first of all much better flexibility and many more exit options than traditional generalist VCs. Generalist VC basically needs to wait for the company to gain traction before they are able to exit, which takes often 6 to 8 years easily. Deep tech investors have many more exit options because, we call it 3 T's. So you can exit because of team, traction, or technology. And yes, deep tech investors have an opportunity to basically wait until their companies reach certain scale, where they become unicorns and they are being acquired because of revenue or because of market share. But there are 2 other options. So quite often, and I would say that this is actually primary exit route for deep tech investors, those companies are getting acquired because of unique technologies they built. And generalist investors don't have this option. And those acquisitions, those exits come actually much sooner. So in one case, we had an exit after shortly longer than 1 year from investment, and it was actually super attractive exit. And it happens. Those companies don't need much revenue or even any revenue, but if they are able to prove their technology is unique, they can get really good exit. Those exits, one thing to consider is that those exits typically happen anywhere between 100 million and 400 million valuations typically. So basically those are exits that large corporates acquire basically based on decision of the general manager of business unit. Because and they really generate, I would say, in Europe easily 90% of deep tech exits, maybe more. And unicorn or IPOs are really kind of the reminder. But there's also another fallback option for exit, which is the quality of the team. it's often called acqui-hire, where basically even if the company doesn't get attraction, or even if it's not able to build the unique technology, sometimes in certain areas you're able to do, let's describe it as acqui-hire kind of exit, which often returns your capital invested or a big part of it. So I think being deep tech investor is in many ways better than being generalist investor. And one big trend that I see now that is really benefiting deep tech is related to dual use and defense. So basically, one interesting thing is that basically deep tech became defense tech, because it is now obvious that the evolution of threats requires very fast cycles, and the evolution is actually very fast. And in order to respond to that, you need to be a startup technically. So no government, no MOD, no prime is able to act at the velocity that is required to be able to react and respond to ever-changing threats. By the way, including the so-called hybrid war. So it's now going way beyond weapons, but we are talking about reconnaissance, ability to sensing, cybersecurity, etc., or even semiconductors. So suddenly, deep tech startups started getting a lot of attention from basically customers, from governments, from MODs. And this is massive opportunity. So take a look at just one thing. European and NATO alliance members agreed to increase their defense spending from below 2% in reality to 5% by 2035. At this point of time, pretty much nothing, way below 1% of those budgets go to startups. It will increase. So I think that in relatively short time we see 5 or even 10% of those budgets going to spending, because there's no other way. Basically, European NATO alliance members will not be able to stay safe, will not be able to ever compete against countries like Russia in terms of number of soldiers, number of tanks, etc. We need to keep the lead technologically. And this will only be possible if we increase adoption of civilian technologies to
Julian,
defense.
Do you agree? Is deep tech currently defense tech?
I completely disagree. No, sorry. I completely agree. No, I think this is more than that. This is defense and sovereignty, etc. But maybe to go back to your question, because we are also moving around. So we at Honda Innovations, we do direct investments, we do strategic projects, and we do fund investments. And when we look at deep tech GPs and VCs that we want to assess, there are a few things which actually we don't see often in Europe. It's increasing. One is the technical skills. I think this is difficult to be a deep tech fund if you don't have a few PhDs in the team. I mean, yeah, you can always work with network, but at the end, being able to understand what you invest in can be useful. I think there is also something which is very important, which is the alignment with the founders. So coming from a founder background, this is something where Europe is very weak compared to other regions. That creates a better understanding, better way of supporting, etc. And also something which, to go to your point, I think something which is also very important is the industry expertise, industry links, because that will be useful in terms of exit, of course. But also in terms of business. And usually, I mean, it's not always like this, but usually you have, PhD team of founders that don't really have the links to the industry, not able to maybe open the right doors, etc. So having a partner like OTB or other ones which have those skills, from a LP perspective, I think this is what we would look for.
Makes sense. Defense is definitely one, but let's dive a bit deeper on the other trends. Is defense taking over AI and quantum, or do you see opportunities there? Is AI and quantum currently becoming a bubble even? Patrick?
In my view, no. Like it's definitely going to be a bubble, a bit like the .com bubble. But the way I look at it is you need a bubble to come so that we can actually develop the winners. So just like in .com, you had, if you look at it 5-10 year perspective, you had Google, So all the expectations for .com, they materialized, but it took a bit of a while. But you had big, huge winners, big, huge losers, and it happened sort of all of a sudden. And I think in AI, it's going to be even bigger, like order of magnitude bigger. So you'll have, 10 times bigger winners and 10 times bigger losers. So we are definitely going into sort of a bubble area, but ultimately, is it going to be a bubble? You'll have big losers, that's for sure. But I think we're starting to see that AI is starting to become like real, like compared to like 1.5 years ago. Now we can see companies like ChatGPT, their revenues are like massively expanding. AI is becoming something that's, not only something that you're developing, it's a business, and that's going to be big. But yeah, in the end, it's going to be something that is going to be big losers. And maybe if I just, we've talked about defense, and I think AI and defense are going to merge closer and closer, as you discussed. That's going to be a huge driver there. We already see in the front lines, we're actively using more and more AI in every aspect. So that's going to be a big part of driving AI development.
For sure.
Yeah.
Although those trends are emerging. So basically AI is becoming part, or has become part of pretty much everything. So basically, like, in space tech, satellite image analytics is AI. In drones, kind of autonomy is AI, et cetera, et cetera. So I think AI became completely mainstream. I think the pure AI kind of like foundational models or some specific models. Yes, they are still growing, but I would say that generally AI has, so the borders between various trends are getting more and more blurry. And I would say that basically, at this point of time, the two sectors that are really getting a lot of attention, where we can talk about hype, but of course, we will need to judge that in a couple of years, because maybe it's not a hype. But I would say the two most kind of like trends that are getting most attention at this point of time are clearly AI and dual use defense.
If I may add something on the AI side, I think I completely agree. I think we are, 15 years ago we were saying that every business will be a digital business, and I think today every business is an AI business or will be an AI business somehow. So either you're AI native, or you're AI migrant and you're using some AI in a way, right? So I think that's one. I think I agree. I think this is probably a bubble, but bubbles are also useful. If you look at the macro trends, AI is maybe what is saving the US from an economic crisis right now. But we also need to look a bit into the details of what is driving the economic growth around the AI. And today, this is more on the infrastructure layer. So this is more about CPUs and GPUs and data centers, etc. So it's today, right now in the US, the big adoption of or the big economic impact of AI is mostly guys building data centers more than the models being used. So I think we need to be careful as well where we place our bets as investors, because as Patrick was saying, there will be big losers and a few big winners.
And you were calling for founders with like technical brilliance, PhDs. Is there anything else that you look for in addition to obviously the technical brilliance?
Oh, well, yeah, so many things. But I mean, being a founder is tough. Being a founder in art tech is even harder. And you need, I would say, a combination of course, technical skills, but it can be also, spread among the founding team. It's maybe not only one person which needs to have all the skills, but at the end, you need to have those quite paradoxical or oxymoron skills, which are deep technical skills, an ability to have a big vision and to onboard people on your vision, because what you want is to have people believing in your vision. They can be investors, talents, customers, etc. So at the end, it's a kind of sheep with 5 legs or something that everyone is looking for, like an inspiring PhD. We can be charismatic and a good seller. Sometimes it exists, but sometimes that can be also the role of the founding team. And I think investors are also here. The CVCs are us, the corporate investors, but also the financial investors are also here to build the skills or the team around the initial technology, basically.
That's a beautiful combo. And I also think that the investor, it's really important to also look at the marketing angle, that the deep tech innovations actually scale and get out there. So that's important. Patrick, do you think that LPs are currently asking for more proof, like near-term returns, or is it okay to double down on like very patient capital?
In general, I see LPs doing two things. They're like after the sort of cool down of the VC market, they're getting more concerned, like I mentioned. So they're trying to find places where they can decrease risk in general, and we see that when these mega funds in the US, they're growing bigger and bigger and bigger. But I do see at the same time like the specialization happening that LPs, the VC investment, at least in Finland, it's a bit better understood. Closed-end funds are a bit more understood, and they are more open to going into VC in general. But this is, I would say, in Finland, like these sort of who's who could be an LP institutional investors. They're more open going into VC, and that transition is happening. But at the same time, they are, how would I say, that they're concerned, and in Finland, the expertise of doing due diligence in VC is not there. So, like I mentioned before, that they'll usually use other sources for their for the DD, like Teollisuussijoitus or somebody else who can verify that these are good investments.
Great. From your perspective, Marcin, are investors currently playing a more hands-on role on the commercialization pathways? Like at Sandwater, for example, we want to be really hands-on on the commercialization part of our investments. So how do you see that?
You see all flavors of investors in the market. So there are sheeps with 2 legs and sheeps with 4 legs and sheeps with 17 legs. So, I think it really depends on the model, because I would say that, we see the whole spectrum from spray and pray to really deeply engaged high conviction investors. We were always on the high conviction side. And I would say that other than super early stages like pre-seed, where really the network matters, and the only way to do due diligence is to look the founder in the eyes, right? We are not, kind of spray and pray approach is disappearing. And by the way, I think this spray and pray approach was actually also driven by, let's say, excessive capital. So I saw a number of investors in good days who were able to raise huge funds, and actually were more interested in collecting management fee rather than earning their carried interest. And by the way, if we take a look at performance of those mega funds established in 2020, 2021, it's terrible. We were actually always on the high conviction in investment side, and I would say that it's really good for the market, for everyone, for the founders, for performance, for returns for LPs, but the market is going in this direction. I would say that if the VC investor is not able to support the founder, is not able to add value, then maybe the investor should focus on investing in public stock, because it's an obligation of VC investor to try to support those companies. From our perspective, the way we apply it is that we do not invest if we don't have a board seat, and we do not invest if we don't have, let's say, at least high single digit, close to 10% stake in a company, because it gives a good combination of, let's say, of having a seat at the table and being motivated and not being perceived as a background noise by the investor. At the same time, it's not to have in, it's leaving space for co-investors, because actually I believe that having a strong consortium in a company is the best way to achieve successful exit at the end of the day.
Julia, do you agree? Is the spray and pray approach disappearing?
Completely disagree, of course, no. Okay, maybe I will go back to your question. I think we are at a time where it's getting very polarized, not only politically, but also in terms of how the VCs work. You have both the mega funds and also the rise of GP, solo GP or micro funds, etc. And I think those guys are doing a completely different job. I think you are not, I mean, it's definitely not the same job, right? When you're in a mega fund pumping, hundreds of millions in a, Series A, or if you're crafting and supporting a founder very early on. So I think we should look at them as also very, they may have the same name of what they do, but they act completely differently. So we might look, let's say, at those differences. We see that I think in Europe we have something like 3,000 VCs, something like that. I agree, 50% don't return right now. So there is a kind of dynamic around the new generation of VCs which are being able to be involved in the deep tech. And what we see in the numbers is that deep tech is actually overperforming the other type of innovations like digital, etc. So the time to exit, all those metrics are, it's a bit counterintuitive, but they are actually better than digital SaaS models, etc. So I think at the end it's really about getting back to what the VCs are about. If we look at in the 70s, all the VCs in the Silicon Valley, they were doing deep tech, so they were taking huge technical bets combined with a vision of what the future can look like. So when you were investing in Intel or in internet infrastructure in the 70s, 80s, etc., it was a bit like quantum today, right? So the time to market, the time to adoption, there were a lot of risks, but this is what the VC was about like 40 years ago. It has been lost along the way for, let's say, many reasons, maybe too much capital, maybe easier kind of mini private equity SaaS business models, easy to scale, easy to understand, etc., easy to sell. But today, I think we are closing the loop and going back to the roots of what this business is about. So betting on technology, talents, and what the future can look like.
So the thing about...
So inspiring, I know. I gave myself the goosebump.
That's good. So the thing about deep tech, the R&D cycles can be really long. Marcin, how do you as an investor support the founders in actually building?
So I would say that, regarding the cycles, the development cycles, it depends. I would say that it can be very long. It can be short. I would say that in some areas you need to be prepared for a longer journey. And good example here would be space tech or semiconductors. So basically, those companies, especially on the semiconductor side, they need a long time to get to revenue. They sometimes, it's not unusual to see semiconductor companies being pre-revenue at Series C. And there are different metrics, right? Regarding development of the product, tape outs, etc. That qualify the company for the next round. I would say that some companies on the AI side actually can develop it super fast, and I think it's important for a VC to understand what those companies need to actually to be able to continue the journey successfully. So on the semi side, for example, the right talent, on the AI side as well, the right talent is super important. Sometimes having good VC in a cap table or VC having the right network can really help to attract the best talent. Sometimes it's about kind of like, also opening the right doors to the right potential customers, potential partners. But once again, I think this is another element where basically sector specialization and sector expertise is becoming more and more important.
To wrap up the panel, please tell in 2 words maximum, in which space will your next investment be in? Let's start with Patrick.
Well, from Jyväskylä University, we see deep tech as a horizontal investment space where we want to invest in all the best deep tech cases in the Nordic, and we're looking for managers that will let us do that. So we're looking at the whole market. We want all the best cases. Who are the managers that will give that to us? We're already in a couple of the local ones, but all the time looking for new managers that we haven't invested in, giving us that exposure and what we discussed over here. We believe that even though deep tech is slower than other VC, that's where the impact and value is, and that's where your returns will be. That's where VC returns come from. And if you look at all the top cases from Finland right now, nearly all of them are research-based, ISI, IQM, which were mentioned and so forth.
Great, Marcin, really briefly.
Yeah, I think it's you raised a good point that it's not only about returns; it's about impact. So to answer your question, it's going to be dual use AI linked opportunity.
Maybe before I answer, I will just ask everyone to say hi because I have 2 teenage daughters and they think I'm a boomer. So if you can say that, if you can look like I'm saying something very inspiring and funny, please, that's perfect. It could, as a father, I really appreciate. I completely agree. I think we have a lot of challenges around sovereignty, defense, etc. I'm personally really excited about the intersect of deep tech and impact. I think we still have a lot of challenges, not only climate, energy, planetary boundaries, etc. So we will probably keep on looking at this intersection for our next investments.
Thank you so much for joining. It was a pleasure to talk.
Great timing.
Thank you, everybody.
Thank you.